So are you tired of being a life insurance agent and not making the money that you want to make in 2025? Well, this video is going to teach you the 3 ways that you can instantly triple your income right now as a life insurance agent. In this video, I'm going to share with you the 3 things that you can do that you can implement right now into your sales process so that you can make sure you are making more money. And I promise you, if you watch this video and do what I'm going to share with you, that you are going to see your bank account go up. You're going to be a much happier life insurance agent because you're not stressed. You're actually selling good business. And most importantly, you are going to make more money as a life insurance agent. Now, before we get started, you might ask, who am I? My name is Peter Roberts. I've sold over $500,000 of final expense of life insurance on my own pen my first year as a life insurance agent, and this month I own a life insurance agency, Legacy Family Life, or there's no chargebacks and there's no lead costs, and I've taught our team exactly what I teach you here, and we've done over $800,000 of final expense sales. So what I'm going to share with you actually works. It's real stuff. I'm in the game, I'm in the trenches, and I want you to make more money. Sound good? So let's jump into the 3 things that you can do to make more money as a life insurance. The first thing I'm going to share with you guys here on my screen is this. So is number 1, the fastest way to increase the money that you are making right now, triple your income as a life insurance agent, is to increase your placement rate. Okay. PL rate. Okay. Now you might ask, what is placement? What does that even mean? Okay. Placement rate means is that it's the number of policies that you sell that actually go in force. For example, here's the problem why most people struggle to make money, and I'm going to teach you how to fix it. Most people are going to sell policies, boom, 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 and they're going to go ahead and then celebrate that on the leaderboards, and all their friends are going to think, wow, great job. You're doing all this income. You're making all this money. But what happens is when Miss Betty goes to go ahead and make her payment, she don't have the money, which means that you just sold all these policies and none of them placed, meaning that you got chargebacks and you did not make money. So I'm going to teach you guys exactly how you can increase your placement dramatically so that your policies actually go into force. Now, let me first illustrate the impact that it makes on your income. So let's say you sell $10,000 of premium, okay, at 100% contract rate, okay, and then you have 100% placement rate, which we just talked about here, which is phenomenal. That is incredible. It's the best you can ever get there. That means that you placed $10,000 of premium. Not too shabby, right? In a week. Then let's take example number 2. So let's say you take the same 10K at the same 100% contract rate, but you only place 30% of your business. Means, let's say you sold 10 policies and then only 3 actually made their first payment. Well, that means you've just went from selling 10K of premium on the leaderboards to actually only placing $3,000. And this is a mistake that I made early on as a life insurance agent, and I'm going to share with you right now how you can fix this. And ultimately, this mistake will make you $7,000. Okay, sound good? Well, let's go ahead and share with you the clear way that you can do it. So how are you going to increase your placement is you're going to live by this acronym known as CLEAR. Okay, the reason that people don't make their payments is because they have some type of concern. They don't have their money in the bank account. They forgot to, make sure that they have that $67 in the account. They close their account. They give you bad account information. I'm going to share with you how you can fix that right now. The rule of sales is that when you're selling, you're going to use this CLEAR method to increase your placement rate dramatically. So the first part of the C is to, number 1, you are going to always confirm price, okay? A lot of agents struggle to do this, and I struggled early on, but when you are selling a policy, your goal is to not confuse the prospect or to sell them a policy when they don't actually know what they're paying for. What you want to do is you want to confirm the price in all areas of the application before you move into the application. Miss Betty, this is going to be $61.25 per month. Is that going to be comfortable and affordable for you every month? She's going to say yes. Or when you're in the application, Miss Betty, I just want to confirm your policy payment is going to be that $61 and that's coming out of your account on the first of the month. Is that going to be there for you? Yes. And then after the application, Miss Betty, I want to make sure that this money is going to come out on the first, and I'm going to be your agent for life. Is there anything else I can help you with today? No. So you want to consistently confirm that price. A lot of people just go into the applications kind of dancing on eggshells about the price. If there's that concern, you need to squash it, because the best thing that you can do is you can sell a policy that the client actually wants, that you know they have the money for, and they're actually going to keep. That's how you help people. Now, the next part of the CLEAR acronym is going to explain, let them know that the money is coming out of the bank account, okay? Let them know that the money is coming out of a bank account, okay? Here's the mistake that a lot of agents make, that I made early on. A lot of times you'd be like, okay, well, make sure you got it there, or you would run away from the word bank account. Now, this is important. You want to let them know, hey, Miss Betty, I want you to know that on the first of the month, that this $63 is coming directly out of your Chase bank account. What that means is that I need you to make sure that that money is there within 24 to 48 hours before that payment, okay? Because if not, this life insurance is not going to help you. It's not going to help your family, and I am not doing you any good. Can you make sure that that money is going to be there in the bank account? A lot of times when you're moving into applications, we go for the approval close. Well, let's just get you approved first, and then we can set everything up if we do get you approved. That is unclear. You want to have clear expectations. Well, Miss Betty, if we get you approved, I want to make sure that you can actually keep this policy and pay for the policy. If we are just getting you approved, well, we have to set up a way to pay for it and use a bank account. Do not dance around the word bank account. I promise you, set clear expectations. Let them know the money will be coming out of their account, and you will have clients that will actually stick with you. And if you are scared to do that, then don't sell the policy, because it's not going to go in force, or it's not going to place. The third part of that acronym, the E, is going to be explain away any concerns, okay? Explain any concerns, okay? Going back to the approval close, I spoke with people who were role playing for the interview to work with me, and I'm like, okay, I need to think about it. And a lot of people are like selling like this. Well, okay, well, I know you need to think about it, and I need to think about it, and the insurance company needs to think about it. Let's go ahead and do an application so that they can think about it, and then we can see if we can even get you approved. Does that sound fair? And I'm thinking that is why you have a 30 or 40% placement rate, is because we don't just sell people policies if they have concerns. You need to understand that when people have concerns, you need to understand how to get to the bottom of their concerns. For example, if someone tells me that they need to think about the policy, well, I typically know that there's probably a price concern, there is a money concern, there's sometimes a financial concern, so I need to attack that. I need to ask them, well, I understand that you need to think about it. Is it more of the price, or are you not sure if you need it? I can't just move into the application because I'm just getting them approved or finding this out to see if they can get qualified for it. No. Your job as the agent is to understand, what are their concerns? Why are they not moving forward? Why are they hesitant? And ask the question, the elephant that is in the room. Miss Betty, can you just not afford this policy? Well, I really can't. Okay, well, instead of just getting you approved for something you can't afford, how about we start with the lower option for $47 a month, and then we can always increase it later down the road. Would that make better sense for you, Miss Betty? I want to make sure I'm helping you. Yes, it does. So you want to always explain away their concerns. And then A is you always want to wrap up your policy, okay? You always want to wrap up, okay? What does that mean? That means after you make your sales call, after you sell a policy, you're not just like, okay, Miss Betty, have a great day, I'll see you in the next one. No, you want to spend 5 to 6 minutes after she gets approved, after she gets the policy number, to write down the policy number. Miss Betty, here's your policy number. Write down on your sticky note that your payment comes out on the 3rd of each month. Miss Betty, here is my information. Here's my contact. If someone calls you about life insurance and they tell you they have a better deal, I want you to call me, because I promise you I have you in the best position. If anybody tries to come behind me and get you a better policy, you reach out to me, because this happens. People don't place policies because other people come behind them and find them better plans. So at least you want to give your client the option to call you to save the policy. And if you implement that, I promise you, you're going to have people calling you. I've had this happen where one of my clients was like, hey, I have this guy in my kitchen. He's trying to get me a better policy and I don't want to go with him. Can you please get on the phone with him? And that is because I wrapped up the policy well. And if you do that, I promise you, your placement rate will increase. And lastly is the R, okay? What is the R? That is to refer a friend, okay? Now, if you want to make sure, a friend, okay? If you if you order something and you really, really enjoy it, okay, you're probably going to tell your friend about it. Imagine if that you could get a policy and then have someone also refer their sister or their uncle or their aunt. This creates more friction in the buying process. If a husband knows that his wife has a policy and he gets a policy as well, they are going to be more aligned on the same page. So the way that you do this is that you just ask for referrals. Okay, you want to just remind them, hey, you just bought a piece of paper. You just bought paper, okay? I'm trying to sell you a life insurance policy to make sure your family's taken care of. Is there anybody else that you know that I can make sure that I can write down or contact if you pass away? So you want to get connected into their inner network. If you are connected into their network, they're going to want to keep their policies. They're going to be less quick to cancel their policy. So make sure every single sale you simply are going for the referral, okay? That was the first way that you're going to increase your income, okay? It's by increasing your placement. Now, the second way that you're going to increase your income is by increasing your mix of business. Let me share with you what that means. Okay, so I just drew that on my screen. Let's pick up. So what is your mix of business? You can see here your mix of business is the percentage of simplified issue versus guaranteed issue business. And I'm going to share with you why this is such a huge determinant of how much money you make as a sales individual when you are selling life insurance. Okay. And a lot of people don't actually look into their mix of business, but it's crucial. And if you know this, it's going to impact your income. So let me give you an example. Number one, let's say we go back to selling $10,000 of premium. We sell $10K of premium with 100% mix of business. That means all of our business is going to be simplified issue. And if you're new to life insurance or you are a life insurance agent now, you know that if it's simplified issue, you're going to get paid higher commission and you are going to get a higher advance. You are going to get typically a 75% advance compared to a guaranteed issue policy, which is going to be a 50% advance, which I'll share with you here in a second. So let's say you have 100% simplified issue and you have 0 guaranteed issue, okay? You are going to then, and you have the same 100% contract rate. Okay, you also are going to multiply that by your advance when it comes to simplified issue, which is 75%. So if you take your 10K, multiply that 100% simplified issue times 100% contract rate times your 75% advance, you are going to have $7,500 in upfront cash collected, okay? Which is money. Boom. That is beautiful, okay? Now here's where life changes, and here's where you need to study and understand as an agent. Let's say I take that same 10K, okay? And then I sell a 40% simplified. So went from 100% here to 40% here. Okay. And then I have 60% of that business went guaranteed issue, which means there's a waiting period or it's graded. Okay. Then I'm going to multiply that by my same 100% contract. Okay. For both of these times my 100% contract. Now, the difference is I have my 75% advance here for simplified issue, and I have my 0.50% for my guaranteed issue. Guaranteed issue is only going to give you 50%, which means that my upfront cash collected from this is going to be $3,000. Okay. And then my upfront cash on my guaranteed issue is going to be $1,500. Okay. Which equals $4,500, okay, which is a $3,000 difference, okay? So what I want to teach you next is how to impact your mix of business, okay? You can see this is a huge change in your production. If I'm selling all guaranteed issue, my income is going to dramatically decrease, and it's going to be factoring, really changing how much. So if I want to instantly make more money right now, what would I do? Number one is I'm going to find better products. I'm probably selling either a captive product or don't have access to a lot of different products that is acceptable for people who have different health concerns. When you're selling more graded policies or guaranteed issue policies, you're making less money because it's more risk for the insurance company, but you need to make sure that the products that you have can work with some of those health conditions. For example, if you find out that all your guaranteed issue business is because someone has COPD, you want to find carriers like Aetna or or is out there in the marketplace that will go ahead and accept someone who has COPD. If you find that a lot of your guaranteed issue is because people have diabetes, well, you want to probably change your carrier or add a product that is going to take your diabetes. Because the biggest lift that you can literally do right now is go from a 40% simplified issue to a 90% simplified. If you can fix your mix of business and get more simplified issue literally overnight because you've added a better carrier, you are going to get more cash in your pocket and something that you can simply fix right now. So connect with an IMO or brokerage or other companies that have these products and reach out to them. Now, the second way that you can increase your mix of business is by changing your marketing. If you are just buying leads from the same lead source and you're seeing that you're getting unhealthy 2-year waiting period people every single second, then you probably don't want to keep buying those leads. Or number two, you need to go ahead and take control of your marketing if you don't know how to market, or if you do how to market, this stuff stems from a marketing problem. On the back end of things, we're always trying to adjust our marketing to make sure that we have our highest, healthiest mix of business. Because sometimes you have to use ads where it says no waiting period, or sometimes you have to use ads where it says accepts health conditions, or sometimes you have to use ads that says get approved with diabetes. And what you're going to find is that when you include those medical conditions, that you're going to attract more unhealthy people, and the more unhealthy the people, the more graded or guaranteed issue business that you're going to go. So it's either a marketing source problem that you're buying leads that are not, marketing the correct way, or if you are running ads, you have to change your copy and ultimately use different images or videos to attract a healthier demographic. And if you do that, you're going to go ahead and increase your mix of business. And the last one that you can increase your mix of business is making sure that you understand how to pivot. This is really important. Let's say here, I'm going to zoom out a little bit. Let's say in the middle, I'm going to with a carrier like Mutual of Omaha. Okay. We're going to go Moo. Moo is a simplified issue product. Okay. Let's say you try to sell them and then they get declined. They get declined because they didn't tell you that they have, stage 3 kidney disease, and you find that on the application. Then you have to go from Moo over to maybe like a 2-year waiting period to like an AIG, which is going to have a waiting period, which stinks because now your commission rate is gone from 75% advanced to now 50% advanced. And also too, I forgot to add in this equation. That's why my numbers would make sense now, is that you are going to get a 50% comp, not a 100% comp. So your comp rate also goes down. And that's kind of a bummer. So how would you do that? You need to learn how to pivot. You need to go from Moo, and then you need to go ahead and learn how to go to another carrier like, I don't know, what would be a good one? We could use Aflac or something, okay? Let's say we'd pivot to Aflac. Aflac would have a simplified issue product, so you have to be able to go from one carrier to the next carrier to the next carrier, and if you can pivot effectively, then you can really start making sure that, hey, the last thing that I'm going to be doing is selling guaranteed issue business because I make less money. So learning how to pivot, and how do you pivot is simply a conversation like this. Miss Betty, man, we were trying for a policy here at Mutual Omaha. It's totally okay. Something came back on your medical records. It's okay. What they're doing is they're going to recommend us over to their sister company. Their sister company is Aflac. They're going to give you a great plan too. There's no waiting period, and they're going to give you the best rate now with your kidney disease. This plan is going to be $67 instead of $54. Is that still work for you? She's going to say yes, and you're going to move her over, and then you're going to go ahead and pivot. Now, the third thing that I can do right now that you can do as well to increase the money that you're making as a life insurance agent is by increasing your annual premium and raising prices. Let me share with you again what that looks like. So as you guys can see here, we're going to go ahead and talk about increasing our annual premium, okay? This is how much people are paying for their policies. Now, let me give you a great illustration on why this is so impactful for your impact. Let's say you have a great week and you sell 12 policies and you multiply that by your $500 of AP. Let's say your average case size is a $500 AP, okay? Which means that is about a $41.60 per month policy, okay? Which is going to give you out a total weekly total of production. Let's say you sell your 12 policies, you're rocking and rolling, you're feeling great. You've sold only $6,000 of AP, okay? But let's say you understand, you listen to this conversation, you're like, I'm going to sell less policies, but I'm going to increase my annual premium. So for example, let's say you sell 10 policies instead, which is 2 policies per day, Monday through Friday, which is super attainable in a good system. You take your 10 policies, times that by $1,100 of annual premium, which is basically a case size of $91.60 per case, and that's going to take you out to $11,000 of annual premium. Okay, which one would you rather do? You're going to spend the time sitting in the chair. You're going to spend the time doing the dials. You're going to spend your time dialing away, getting objections, working hard. Which one would you rather make? Okay, this is, clearly a $5,000 gap that you can make up right now if you learn what I'm about to teach you. Okay, so how do you increase your average premium? Number one, it comes down to a belief. Okay, there was a time in our business when our average premium was like $600. Okay, because we believe that you shouldn't sell, over expensive policies, that people don't need that much. They're on a fixed income. So now getting to over $1,000 of consistent annual premium all comes from belief that I'm here to solve problems. I'm here to make sure my client is completely taken care of, and I'm going to make sure that I sell good business. And the way that you can change that belief is just simply by starting your options, what's going to go ahead and give you favor. Instead of starting at a $45 option pitch, a lot of times this is what we did. We would start, all right, Miss Betty, the first option is going to be $45 a month. No, we went from doing that to then changing it over to starting an anchor at $80. So doing an $80 option, a $100 option, and a $120 option allows us to simply, by changing our prices, increase our average premium. And the easiest way that you can do that is by starting at a higher pitch rate when you sell the product that you're selling. Okay. Now, the second thing that you can do to increase your average premium is to adjust for inflation. Okay. You need to understand that the formal burials or, mortgages, things are going up in 2025. So 20,000 to 30,000 is going to cover a burial. Okay. So if you're selling Miss Betty small $10,000, $5,000 policies, 5K policies, you are losing out on huge potential and you're not solving the problem. One of the worst things that you can do as an agent is sell someone a policy and their granddaughter call you back and say, hey, my grandma died and, she only has $5,000 of coverage. Her burial is $22,000. What am I going to do then? So you need to not pitch with your own wallet, but you need to pitch to solve the problems. And the way that you do that is you let them know in your pitch, hey, Miss Betty, the average funeral is anywhere between $18,000 to $22,000 in your state. So having at least $20,000 is what you're looking for, right? And if they say yes, that means that you're going to start the $20,000 option. You're not going to pitch someone a $10,000 option who's trying to have $20,000 for their burial expenses. It does not make sense. So understand that inflation is a huge understanding, impact in the way that you actually sell, and it will increase your average premium if you increase that. The last thing I want to share with you guys that really impacts my average premium, that really makes an impact that you can use right now, is that you want to set a minimum. Let that minimum be no less than $50. Okay. We know statistically speaking that over 80% of the policies that are under $40 won't place. Going back to point number one, majority of your policies that are really, really cheap, that are $30, $20, don't sell those policies. So set a minimum. Get especially $50 or more. Everyone can afford $50 of final expense life insurance. So if you set these floors, it'll allow you to know that, hey, I am not going under $50. Miss Betty, I need to make sure I'm solving your problems. If I go under $50, I'm only going to get you $2,000 to $4,000 to $5,000 of coverage. That is not enough to make sure that your family is actually taken care of. And if you set those floors, it allows you to feel more confident, to not break kind of what you're looking for, because you want to make sure that not only are you doing great work, but you're doing work that pays you. Let's be honest, we're all in life insurance to make money. And if you have a low average premium, you're going to struggle to make sales. Their acquisition costs are going to be a lot higher. You're not going to have enough capital to reinvest back into your business. And you're going to just struggle to want to make money as life insurance. So if you do these three things that I share with you guys in this video, if you, number one, increase your placement rate by using the clear method. Number two, increase your mix of business by having better leads, funnel systems, products, you will make more money. And number three, if you increase your average premiums right now and you set the standard, I am not going under $50. I promise you, your bank account will go like this. It'll go up and you will make more money. So thank me after this video, after you actually start making some money. So if you guys love this video, please drop a comment below. Thank you so much for tuning into the channel, and I hope I can help you. My mission is to help you make more money to win as an agent in 2025. Love y'all, and I'll see you in the next one. Take care. Cheers.